The year 2022 has been the year of so many events. Inflation surge, job losses, hybrid work model, and then its eventual ending. Year 2022 witnessed its own share of ups and downs, teaching us the ways of life. One of the most remarkable events was the Russia-Ukraine war that started in the beginning of the year. It impacted economies and hammered stock markets. In 2022, the boom in crypto market has also come to an end.
2022 will be remembered as the year that witnessed the crash of cryptocurrencies, which were the darlings of investors and speculators in 2021. Pessimistic macroeconomic factors led to a continuous drop in the price chart of popular cryptocurrencies in 2022. From the peak of $68,789 in November 2021, the most popular cryptocurrency, Bitcoin, crashed by around 70% in 2022. It is now continuously trading below the $20,000 mark. While there are a number of factors that are influencing the crypto prices, the recent one is the crash of crypto exchange FTX. The FTX's bankruptcy has affected the entire cryptocurrency market. Another reason for the crash of cryptocurrencies is rising interest rates. Since the pandemic, the United States and other parts of the world have been witnessing record high inflation that resulted in price hikes. This led to a rise in interest rates that reduced the money supply in the market. Major crypto exchanges had to bear the brunt of the fall in the crypto market, and some of the crypto exchanges have collapsed or are on the brink of collapsing. Some of the major crypto exchanges have crash-landed into bankruptcy. FTX's implosion was the biggest and most spectacular crypto downfall in 2022. The Bahamas-based exchange started the year with a $32 billion valuation. It hired celebrities including Larry David and Tom Brady for flashy Super Bowl ads and put its name on the home arena of the NBA's Miami Heat. FTX, which said it had more than 1 million users, positioned itself as a white knight that could rescue other crypto firms amid market turbulence earlier this year. But by November, FTX went bankrupt after a week in which a possible merger with rival crypto exchange Binance failed, and FTX founder Sam Bankman-Fried dealt with allegations that he had funneled customer deposits to FTX's affiliated trading firm Alameda Research. The exchange suffered withdrawals of about $6 billion in just 72 hours. Crypto lender BlockFi is another crypto company to follow FTX into bankruptcy, filing for Chapter 11 about 2 weeks after FTX's collapse. BlockFi had several ties to FTX, and it had relied on a $400 million FTX credit facility to stay afloat after competing crypto lenders Voyager Digital and Celsius Network went bankrupt as a result of market turbulence earlier in 2022.
I think those things only have short-term impact, to be very honest. When one project fails, especially of that magnitude, it is a shock through the entire crypto system. But the shock actually makes the foundation stronger. The guys that can withstand those shocks, they're much stronger afterwards. So a lot of people do get hurt, which is very unfortunate. So we feel very sad about that. But the industry is not going to disappear. So in 2000, many internet companies failed. But did that kill the internet industry? No, it actually consolidated the industry. Amazon got much stronger. Google got much stronger.
Most big banks and investment managers expect the cryptocurrency market to pick up in 2023 after a brutal year. Some experts say that while Bitcoin may still recover to $30,000 in the second half of 2023, it will not touch the peak value anytime soon.
High inflation during the year 2022 contributed to a muddled financial performance for the economies. It forced central banks to raise interest rates, while consumers were hit as the cost of everyday items touched record high. The profit margins of some companies also took a beating as a result of high inflation.
The biggest crisis of the year, 2022, began with the starting of war between two neighboring nations, Russia and Ukraine. On the 24th of February, the world closely watched Russia's decision of invading Ukraine. The war that began in February continues to wreak havoc in the continent, and the consequences of this have had far-reaching impact. bringing in store not only large-scale exodus and destruction, but it also raised the cost of living all around the globe. The term cost of living is defined as the fixed price associated with maintaining a certain kind of lifestyle. Economists and experts make use of this concept to monitor and register the changes in the economic activity. Since the past years have not been very kind towards the wealth reserves of the countries, thanks to COVID-19 and now an ongoing Russia-Ukraine war, serious repercussions have surfaced in the form of an eclipse on the spending capacity of the people. The consumer price index around the world has witnessed a record-breaking hike. The statistics stand as a testament to the impending crisis. That is not all. The entire European continent is facing a major crisis with managing finances. The Federal Reserve in the United States has also issued policies to combat inflation, but the crisis continues to loom. People across Europe are expected to miss bill payments in the coming months as rising inflation impacts household finances. There is a widespread unrest across the nations as the workers struggle with low payment and rising costs. Similarly, in Germany, inflation touched the record high at 10.4%, the biggest increase since 1990. The surging cost is leading to a squeeze in household budgets. That is not alone. The prices of household commodities have also risen exponentially. In India, the fuel prices have surged, resulting into a rise in the cost of food items in restaurants, cab services, apparels, and day-to-day activities. The shipping industry, on the same scale, is failing to ensure the supply of goods. The war is still on, and with it, the aggregates of destruction and prices of goods is bound to reach its maximum capacity in the future. The need to prepare before the shock has now become paramount. Also, the global debt crisis worsened in 2022, with developing nations facing increased risk of debt distress and growing borrowing burden. Amid cascading crises and inequalities, developing countries face major challenges with a complex creditor base as borrowing burdens increase and risks of debt distress grow. Government debt levels as a share of GDP increased in over 100 developing countries between 2019 and 2021. Excluding China, this increase is estimated at around $2 trillion. A strong dollar has contributed to the spiraling debt crisis. International Monetary Fund estimates show that 70% of all the debt in emerging countries and 85% of the debt in low-income countries is in foreign currency. With interest rates rising sharply, the debt crisis is putting enormous strain on public finances, especially in developing countries that need to invest in education, healthcare, their economies, and adapting to climate change.
The year 2022 saw a massive round of job cuts and hiring freezes by companies. Almost all major tech firms like Amazon, Apple, Microsoft, and Twitter have trimmed their headcounts at Workspace. It is to combat issues like geopolitical turmoil, supply chain mismatch, and surging economic inflation. Tech companies announced massive layoffs to cut down their costs and support balance sheet.
The fear of a global recession and the shortage of investments has resulted into large corporations giving pink slips to their employees in 2022. From the e-commerce giant Amazon, which is led by billionaire Jeff Bezos, to the Facebook, owned by the czar of social media, Mark Zuckerberg. All have resorted to layoffs to save costs. As the funding winter intensified in 2022, the major global startups also issued pink slips. Estimates say the number of employees that have been laid off in the tech industry in the current year is more than what was done during the dot-com bubble of the early 2000s. The tech industry is not alone to deal with the crisis. Consumer durable firms, real estate, and many other sectors have also seen massive layoffs in 2022. Many of the companies were unable to maintain the momentum of COVID times. There was a massive hiring in the tech sector during COVID lockdowns. But as the markets opened, shrinking the virtual world, COVID-era boom couldn't be sustained, and the tech giants had to fire employees. Data shows 853 tech companies have so far laid off more than 137,000 employees. The major ones are Google's parent Alphabet, that laid off more than 10,000 employees, while Amazon is planning to lay off around 10,000 workers. Meta has fired 13% of its workforce, translating into 11,000 employees. While other big tech companies such as Twitter, HP, and Salesforce have also fired thousands of workers, the global banking industry has also witnessed massive layoffs in 2022.
Values are lower, and that affects the investors that have put money in the company in earlier phases of those companies, especially for most of these companies that are startups in the early stage of financing of those companies. And one way to make sure that there is a return on their investment is to improve the cash flows that they expect, and how they do so by cutting the obvious costs and unfortunately, workers are one of them.
In India, the massive job losses have also been registered in the startup sector, where around 20,000 employees have been laid off by 52 startups, including unicorns Byju's, Chargebee, Cars24, Ola, Hoyo, Meesho, MPL, Udaan, Unacademy, and Vedantu. As funding winter is here to stay and the fears of global recession are rising, experts say the layoffs may continue next year also.
Year 2022 was not bad for all companies and economies, some of them including defense companies and energy majors. They benefited as nations went for the historic military buildup, and oil prices, they also jumped as a result of Russia-Ukraine war.
The year 2022 will go down in history as the year of geopolitical tensions and a slump in stock markets, among many other sectors. The year marked the beginning of a completely unforeseen chapter in the economic history of the world. A war between Russia and Ukraine, two neighboring nations, was a curse to many, but it also benefited some sectors. Defense companies have emerged as the real winners of the year. The global defense market grew from $474.6 billion in 2021 to $513.57 billion in 2022. An extraordinarily high average growth of 8.2%. Among the defense companies, big names such as Lockheed Martin, Raytheon Technologies, Northrop Grumman, and many others have emerged as massive profit makers in a sluggish economy. The stock prices of many defense companies took a drastic leap on announcement of the war. The Russia-Ukraine war has changed the course of these defense companies. A day before Russia invaded Ukraine on the 23rd of February, Lockheed Martin's stock traded at $388.9. It took a leap of 27.6% since then and touched its peak at $496.2 on the 2nd of December. Northrop Grumman, that traded at $386, took a leap of 42% after the Russia-Ukraine war started and touched its peak of $548 on the 31st of October. Raytheon Technologies initially traded at $92.2 and took a leap of 13.8%, touching its peak at $105 on the 20th of April. While General Dynamics traded at $216.3 before the war, after the start of the war, it took a leap of 18.2%, touching a peak of $255.7. And lastly, Thales was trading at $89.5 per share before the Russia-Ukraine war, but jumped 53% after the start of hostilities, touching a peak of $137 on the 3rd of November. Another industry that shares the fortunes of the war is the energy sector. As crude oil and energy prices recovered and remained stable during much of 2022, these energy companies made staggeringly high profits. Russia's reduction in oil supplies led to a surge in crude oil prices. Chevron, whose first-half profits amounted to $4.5 billion in 2021, jumped to $17.9 billion in profit in the first half of 2022, registering a massive growth of 297.7%. ExxonMobil registered a profit of $7.4 billion in the first half of 2021, which jumped to $23.4 billion in the first half of 2022, showing a massive leap of 216% over last year. Saudi Aramco's earnings in the first half of 2021 were about $47.2 billion, which jumped to $136.3 billion in the first half of the current year, registering a massive growth of 188.7%. Shell registered a profit of $6.6 billion in the first half of 2021, that increased to $20.63 billion in the first half of 2022, registering a massive increase of 212.5%. Apart from these industries, companies like Walmart and Apple have also performed exceptionally well and are in for a win as the luckiest of the lot. Walmart made huge profits, adopting better marketing strategies and inventory management. The company's US sales grew 8.2% due to strong growth in food and e-commerce. Apple has also taken a reasonable hit as a result of a slump in demand. The company emerges in the spotlight as an exceptional performer. Apple's revenue rose 8% to $90.1 billion in the second quarter of 2022, beating estimates of $88.9 billion in revenues. In times of crisis, it has shown resilience and adaptability to sail through the chaos.
Tech sector in particular took a beating in the year 2022. The lofty valuations of IT majors could not be maintained. 2022 has been a year of bad and worse for tech stocks.
The year 2022 has been a disappointing year for tech stocks, which were some of the biggest winners during the early stages of the pandemic. Trillions of dollars have been wiped off in wealth as a result of the fall in tech shares in 2022. The tech-heavy Nasdaq index has fallen nearly 40% since January 2022, falling into a bear market. Tech stocks have been impacted by the interest rate, inflation, macroeconomic uncertainty, global pressures, and the strong US dollar. Tech companies are also finding it more difficult to grow sales as digital advertising and other revenue streams slow. The fall in stock valuations is quite visible in FANG stocks, including Meta, which was earlier known as Facebook, Apple, Amazon, Netflix, and Google's parent Alphabet. Over the years, these stocks have given exponential returns to investors. However, in 2022, most of these companies corrected by a large percentage. In India, also, the technology stocks have followed their US peers. The Nifty IT, a key Indian stock market index for the information technology space, is ending 2022 down 24% from the previous year. Its worst fall since the 2008 global financial crisis. This decline comes after 5 straight years of annual gains. Tech majors such as Infosys, Wipro, Tech Mahindra, and Mphasis have lost more than 40% of their market value in 2022. India's new age tech startups are in soup too. The newly listed internet companies, including the torchbearer Zomato, along with Policybazaar, Nykaa, Cartrade, and Paytm, have fallen from their listing highs, with billions in market cap evaporating and shifting investor sentiment. Many of the companies have also lowered the revenue growth projections for next year. As tech stocks continued to take a beating, Wall Street and Indian analysts warn that could be bad news for the broader economy, as lackluster earnings results likely signal that inflation and high interest rates are squeezing households and businesses more than expected.
From Twitter's new boss Elon Musk to Ratan Tata, chairman emeritus of Tata Sons. Up next, we talk about all the newsmakers from the world of business in the year 2022.
Elon Musk, Twitter's new boss, has been the most talked about executive in 2022. He bought Twitter and tried to make changes in the business model. He also fired thousands of employees, which was considered good for Twitter's financial health but bad for its image. The 73-year-old French billionaire Bernard Arnault's fortune is $180.2 billion, nearly $17 billion more than Musk's. Earlier also, Bernard Arnault briefly attained the world's richest person's position in 2019, 2020 and again in 2021. Jack Ma, the reclusive founder of one of China's biggest e-commerce firm, Alibaba, and once the richest business leader in China, has been living in central Tokyo for almost 6 months. This is amidst Beijing's continuous crackdown on the country's technology sector and its most powerful businessmen. Ma has largely disappeared from public view since he criticized Chinese regulators 2 years ago, accusing the state banks of having a pawn ship mentality. India's Tata Sons Chairman Emeritus Ratan Tata cemented the position of the group in India's aviation sector by acquiring the national carrier Air India. He has been a constant guiding force for group's activities and consolidation in the aviation sector. Indian origin former CEO of Twitter grabbed headlines after getting fired from the social media giant Post. This happened after Elon Musk's takeover. Agarwal was also in the news for his high severance package of $42 million. Sam Bankman-Fried was one of the richest people in crypto, thanks to his FTX exchange and Alameda research trading firm, before his empire came crashing down in November 2022. After users began withdrawing their investments from FTX at a very rapid pace. Bankman-Fried filed for bankruptcy for FTX, FTX's US operations and Alameda Research. It's a stunning fall from grace for Bankman-Fried, who had been heralded as a modern JP Morgan for sweeping in to save troubled crypto firms before his own firm blew up. Nick Reed will step down as head of Vodafone by the end of the year and be replaced on an interim basis by his finance director, bringing an end to a 4-year tenure marked by a near halving of its share price. Reed led the former mobile telecoms market leader through the pandemic and also sold assets to increase its focus on Europe and Africa. Despite the changes, Vodafone's shares have remained in the doldrums.
That's all we could sum up the year 2022 for you. Until next time, goodbye and take care.